Ladies and gentlemen, thank you for joining me today. It's nice to see you again. It's Dustin Nulf with Keller Williams Realty's the Dustin Nulf team and the Full House LLC Pittsburgh Property Management. We are talking today about financing investment properties. So we're going to talk about the standard routes in which you can finance investment properties. We are not going to be talking today about creative financing or owner financing, land contracts, options, that sort of stuff. So I do have a couple videos on that. They will be linked below in the summary if you want to watch those videos or get more information on that. We will be talking today only about standard financing for investment properties. So before we get started, please do check out the links below in the summary. Give me a thumbs up and subscribe if you like this content and you want to see more of it. I'm posting a couple videos a week usually, and I also offer real estate coaching online. There's links to that below on my Patreon site. I do real estate agent coaching for $10 a month. I do real estate agent team building coaching for $100 a month, and then one-on-one coaching in your choice of subject. So either real estate agent sales, real estate agent team building, or real estate investing. The one-on-one coaching is $1,000 a month. We do that either over the phone or via Zoom meetings. And we do a personalized coaching plan based on where you're at right now in your business and your growth and what you want to achieve within the next year. So check those out. I got links for awesome books that you should read. I have a link to a free trial at Audible. You should definitely do that. Get some audiobooks. I think you get 2 free audiobooks if you sign up. By all means, do that. Learn. Audiobooks are great. I listen to them whenever I'm driving into the office in the morning or if I'm on a trip. All right, so let's get rolling. Financing investment properties. How do you finance investment properties? We're going to look at the basic options and what's available now. Depending on the market, the market changes. When the market changes, your financing options change also. So you want to be aware of what the market has in store for you, and you want to be in touch with your local lenders so you know what products they have available and how the current market conditions are affecting those products. What we're going to look at today, we'll start with the conventional products that you can use to finance income properties. And when we're talking about buying residentially zoned income properties, so we're talking single family, duplex, triplex, and fourplex, you can use conventional products to finance those. We will be talking about commercial products also, so stick around. But first and foremost, let's talk about the most basic one. If you're looking to house hack or you don't even know what I'm talking about, but you want to get into investing and you're a new investor, you can use an FHA or VA loan or even a 203k loan to fund the purchase of your first investment property. So we're going to call that FHA. So that's FHA type products. And FHA you can finance with as low as 3.5% down. Okay? If you're a veteran, you can get a VA loan for 0% down. They will literally pay everything, including your appraisal, your inspection, that sort of stuff. You get reimbursed for that. So these are like extremely great products for you to get started with. And the way you can only use FHA, VA, and 203k loans if you're purchasing a property that you're going to live in. Okay? Now, if I were to do it all over again, the first property that I would have bought would have been a fourplex. I would have went for the maximum amount of units with a residential FHA type loan. I would have gotten 6% seller assist, which you can get, that's your max seller assist. So with a product like that, I mean, you could literally get into a property for only 3.5% out of your pocket, because the 6% is usually paying for all your closing costs, which is nice. So that's what I would do if I were starting out again. So once you use those, if you use an FHA loan, if you have one FHA loan, you can't have another one. That's it. So what people will do, like when they say house hacking, what they do is they buy a property with an FHA loan, they live there for a little bit, they start making money, and then they refinance it into a conventional type of product, and then they'll go buy another house and move to that one or move to that fourplex and get an FHA loan to purchase that one. So now they have a conventional loan and an FHA loan. You can have up to, right now, you can have up to 10 conventional loans in your name, okay? So you can have a lot of loans conventional before you even get outside of the residential conventional product realm. So if you're going to get started and you're just kind of a newbie to this and you want to start in residential real estate, that's a great way to go about doing it. I would say max out your conventional loan products. Make sure you have a nice umbrella insurance policy to protect you, because when you're buying with a conventional product, you have to have it in your own name. You cannot have it in an LLC name. All right. So that's a good thing to consider if you're just getting into income properties. So your second option, we're going to say conventional. So conventional is different from FHA. So FHA is your federally backed stuff. You're going to have really low down payments on FHA type products. Conventional products are going to require a bigger down payment. So usually if you're buying an investment property with a conventional loan, they're going to require anywhere from 15 to 30% down. And then they're going to look at the numbers of the property you're buying to make sure that the income's there and that sort of stuff. So this is, that was seller assist. This one's going to be 15 to 30% down. So it does require a substantial amount more down. So you have to have a good bit of money saved up if you're going to buy with one of those products. Conventional loans, again, you need to have them in your own name. You can't have them financed as an LLC or an LP or some sort of entity. So that's kind of the potential drawback of a conventional product. But again, you can have 10 of those. So I would say, you know, max these things out if you can before you move into commercial products. Okay, and that's our next type of financing, is commercial. So with commercial products, how it works here anyway in Pittsburgh is that if you're getting a commercial loan for, let's say, like less than around $1 million, you're better off going to a small local bank. If you go to the small local banks, they have an interest in making sure that the community's growing, and they're going to invest in the local real estate market, and they know what's going on with the local market, so they're going to be more apt to give you what we would call a small commercial loan. So a small commercial loan is anything under $1 million. So if you're starting to get into that realm, like where you're searching for commercial products, I would say start networking and meeting with the local commercial banks, or just the local banks in general. Like around here, like S&T Bank is a small local bank. Standard Bank is one that we use a lot. There's Slovak Bank and Brentwood Bank. Those are small Pittsburgh-based banks, or that have a small Pittsburgh backing. So those are good ones to look at for your small commercial loans. Now the thing about commercial loans is that it doesn't have to be a commercially zoned property for you to use a commercial loan. You can buy a single family home with a commercial product. So if you're going to do, like, let's say buy a single family rental, and you're buying it with an LLC's name, or an entity is the purchasing or the buyer, then you're going to pretty much need to use a commercial loan. And you can get a commercial loan, I think the smallest one we got is around 40 grand. You can get a pretty small commercial loan for single family homes and smaller residential stuff too. Now you can also get, like, if you for instance, you're buying a storefront with a couple apartments above it, that's going to be commercially zoned, and it's not going to work for conventional products, so you're going to have to go the commercial route. And that's a good example of something that's going to be commercially zoned that's smaller, that you might need a small commercial loan for. So these are your three basic options for purchasing an income producing property. And I would strongly recommend that you are meeting with and kind of networking with and interviewing the local commercial and conventional lenders, so you know what products are available to you and what sort of rates are being offered out there. Because if you're trying to evaluate a property and you don't know what the interest rate is that's being offered or what the terms are, like, you can't evaluate the property. You don't know what your options are. So you really have to kind of pick the brain of these lenders to know what you're working with and how those numbers are going to work out for you. So I hope that helped. This is a short video. If you liked it, give me a thumbs up, subscribe below, and hit the notification bell, and that'll keep you updated as I'm posting up to a couple videos a week about real estate investing, real estate sales, and wealth building. I hope you liked it. Thanks for joining me. Check out the links below. We'll talk again soon.